The challenge that we often see is that we have clients, sellers who maybe they were profitable in the past, but then they're getting ready to retire. They're not really all there, right? They're like, they've got one foot out the door. They want to sell the business and they've let the business start to deteriorate and it's no longer profitable. It was in the past, but it's no longer profitable. Unfortunately, they've kind of let go of all the profit or all the value of the business because they've let it become a unprofitable business. At which point your best route is just to sell it for assets. Now there's one other possible scenario. You're not going to be able to get approved for an SBA loan, but what you could do is if you're the buyer and you say, I'm willing to pay $1 million for this business, SBA is not going to lend it because it wasn't profitable last year or doesn't cash flow for $1 million loan. So what you could do is agree to a seller note with the seller. So what that means is you're going to pay that seller. They're basically going to finance the business. So you would take over the business as the buyer and you're going to pay the seller a monthly payment until you pay off that, $1 million or whatever the purchase price is. So the seller's not getting any cash up front and they are taking the risk and, kind of putting their money where their mouth is. If they think that business is worth $1 million, well, they're going to give over the business to you as the buyer without receiving any cash, and you're going to pay them monthly through that seller note. So that is the most common approach when you have a situation that it doesn't cash flow for an SBA loan, but you as a buyer still really want to pay that purchase price and the seller really wants to earn that $1 million valuation. A seller note's probably your best option.